Our last theme is in the alternative space, and we're calling it hedging the dual risks that we see this year. And while the Fed has a dual mandate that everybody knows about, we're talking about the dual risks of inflation and high valuations. And high valuations are not just seen in equities or bond markets. We're seeing valuations when you look at the commodity space, specifically with gold, at levels that are just astounding. When you look at the momentum that's driven gold prices to all these repeated highs, look at this chart, and this is the gold to oil ratio. You're looking at this at the highest level we've seen since the short-term disruption during COVID, and you've got to go back at least 30 years before you see this higher. When you look at gold versus oil or gold versus copper or gold versus coin, all of these commodities, it is trading at between 100 and 500% premium to its historical average. That, from a valuation perspective, is not warranted chasing this rally. That's a contrarian view. Most people think that with growing debt and with a weak dollar that you should have an alternative to the US dollar. We just don't think chasing gold here is the way to do it. Instead, we're looking for some well-diversified commodity baskets, not that are just concentrated in gold, even though it has a big portion of the commodity market. We do think that gold's susceptible to some pullbacks here, and we saw that last year. We also saw last year it start to exhibit some closer correlations to things like the NASDAQ and other momentum-driven trades. So we're not chasing gold. Hedging the valuation risk in the market, that also goes on the equity side. So for those investors that can look at illiquid investments, the qualified investors, there are many different options out there that you can utilize to hedge your long-only equity exposure. There's even liquid alternatives that have really matured and proven very beneficial for those investors that can't go into the illiquid markets. Those are things you want to focus on. In fact, we've been adding some of our exposure into those areas. From hedging that inflation risk, it is commodities, but also infrastructure continues to be a longer-term thing that we're looking for, not only in the liquid, but also in the illiquid markets.